Welcome to the Kallanish Steel Markets Insights webinar, Europe edition. It's focused mainly on Europe, of course, but we have a global reach for this event today. We have almost 500 delegates registered from 62 countries. So there's going to be a lot of interest throughout the globe. The main focus these days is on Europe because of the unfortunate events that are happening in Ukraine, which are, of course, influencing and impacting directly steel trade and economic activity in general. I'm Adam Smith. I'm the Kallanish Global Editor. I'm joined by my team today of panelists, Emanuele Norsa, who's our Southern European editor, Katja Orakova, who's our CIS and Turkish flat products reporter, Christian Köhl, who's our Northern European reporter, Burçak Alpman, who's our Turkish market reporter, and Amir Sayed, who's our Indian subcontinent reporter. So as you can see, although the focus will be on Europe, we are going to bring in our experts from outside of the continent as well to give their view on how the situation is impacting their markets. Europe stands at a turning point, not just in terms of steel trade, but economically and politically in general. We have a war in Europe, something most of us thought we'd never see. The situation is changing rapidly by the hour, and today we'll try and bring some sense to what's happening. The steel market is difficult to predict in normal times, but of course, during war, it's impossible to say with certainty, to give any sort of forecasts with certainty of what's going to come in weeks or months down the line, but we'll try and do our best to shed some light on that today. So without further ado, I'd like to kick us off with a presentation by Emanuele Norsa, which is going to set the scene for the rest of our discussion. So please, Emanuele, the floor is yours. Take it away.
So yes, as Adam said, we're definitely at a turning point in Europe. I mean, it's what happened during the last months was already very interesting. The market restarted preparing for a pickup after a slower second part, let's say a slower last quarter of 2021. But what, of course, happened on the 24th of February, let's say, took the market unprepared in a way, of course, as all the wars are. So what I'm going to look at in my presentation is what I call the perfect storm. So how did the perfect storm, the invasion of Russia into Ukraine and the and the start of a new war on European soil impacted the European and the global market? Let's have a look first of where the market was before the 25th of February. We all know these charts. Here I've put hot rolled coil from China, domestic North America, and domestic in Northern Europe. You can see the trends that we knew. I mean, the European and Chinese market and global hot rolled coil market were actually picking up since the beginning of this year. The North American market were still under pressure after an enormous rise registered in 2021. So they were still in the process of realigning in a way to global levels. But the European, as I said, the Chinese market, but also the Turkish and CIS markets were already recovering, pushed by increased sentiment, an expectation of better demand with the complete end or almost end of COVID and so forth. But let's see what happened after the 25th of February. As we know, during the night of the 24th of February, the war started again on European soil, specifically in Ukraine, and this is what happened to hot rolled coil prices. This is, of course, to see how the perfect storm, as I call it, hit the market, all of the markets, because not only the European market jumped, but also North America. But it hit the markets in different forms. I mean, the The North European market, because of its proximity and its ties to the CIS region, jumped dramatically. North American market was impacted straight away, but if you look at the Chinese line, we see, of course, a recovery, but the recovery seems to be sort of continuing a recovery already initiated in the market. So what is interesting here, and what we will discuss, is who was impacted the most and who will be impacted the most by the ongoing uncertainty in Ukraine and Russia as a consequence, and what is going to happen. If we look at long prices, the situation is very similar. Here I have also on the red line Turkish rebar prices, and you can see how Turkish and Northern European prices jump, whereas actually in the Midwest, in the US and in China, the market didn't react that much to the new war in Ukraine. So of course this confirms again not only the impact, the main impact on proximity trade partners such as Europe and Turkey, but also, and we'll see closer, on those partners that rely the most on scrap and metallics coming out of the CIS and the Black Sea. So of course, in this graph, you can see this is a World Steel Association chart, and here you can see how important CIS exports are, but in particular how reliant the European Union and the Europe in general is on CIS export. If you put together the 12.9 million tons exported to the EU plus the 6.1 million tons exported to other European destinations, you see that most of the finished steel CIS products go into Europe, and this of course explains why the impact on Europe was so direct and was so rapid as well. Let's move into raw materials. I mentioned, of course, geographically, the impact is definitely clear on Europe and Turkey, but let's look at raw materials, input costs. Iron ore, as you can see in the chart, was going through strong volatility since the end of last year. It was actually, at the beginning of this year, it was actually moving downward. I mean, it was suffering a little bit uncertainties of Chinese demand market. What happened around the 25th of February when the war started is that the price picked up, the sentiment picked up, returned to new record level. Of course, not all-time record levels that we've seen in 2021, but jumped quite significantly. At the end of last week, mainly, this jump already sort of slowed down. There was already a correction, and this was mainly because of new uncertainties coming in the Chinese market related to both COVID, we'll talk about it in a minute, and also, for example, uncertainties created by the decision of the LME to stop nickel trading, bringing a new wave of uncertainty in general in the metals market. But so if iron ore was hit by the uncertainty, jumped definitely, so impacting input cost of steel makers globally, let's see what happens to scrap. This is what happened to scrap. I mean, scrap reacted in a complete different way, jumped, but it jumped dramatically to level never seen before and to level almost unexpected. So it jumped almost $150 in the range of 2 weeks almost. It reached a new record level, breaking the previous record level, and of course, as we know in the graph, the scrap market was already moving in a different way. There was already a recovery ongoing. The market was fluctuating at a new very high range, whereas iron ore was now now far from the previous record level. But what happened is dramatic, and it's going to be impacting directly steel makers using scrap as a major input cost. And this is why, for example, we saw the reaction of Turkey, of Europe, and in North America. So before I continue, I would like Holly, my colleague, to pull up the poll that we have every time, in every webinar. We ask your opinion on the market.
Yes, we're going to run a poll now for everybody to participate in, the whole audience, so please make your opinion be known. The question is, when will Turkish scrap prices return to levels close to $500 per ton CFR Turkey?
Okay, so we're back. I think Adam will then read us the results later on, but let's go back to what we were saying. Scrap was, of course, scrap jumped dramatically after the war in Ukraine, and of course, this changed the scenario also for different producers across the globe. Those more let's say, dependent on scrap, and those more dependent on iron ore. We mentioned COVID already when we talked about iron ore, and this is an interesting part, something again that adds to the perfect storm that is going on, something that we weren't predicting, as we weren't predicting the new war in Ukraine. But what happened in the last week is also we started seeing new lockdowns in China related to COVID, to a new wave of COVID, let's call it. And this is, of course, impacting sentiment in the iron ore. And this is also one of the reasons behind the different movements of scrap on one front and iron ore prices on the other. What is interesting, in my opinion, looking forward, I mean, it's always difficult to give an outlook, but looking forward, what's interesting is that it seems like in the last 2 years, Europe in particular, the western part of the world, Europe, the US as well, accepted the fact that there is a need to live with COVID in a way, a strategy that has been sort of pushed strongly in the UK, in the US, but now it's happening also in Europe. This was never the case in China. I mean, this strategy was never actually taken in consideration as of today by China. So what is going to happen with this new wave of COVID infections in China is a little bit unknown. I mean, if the country enters a new temporary lockdowns, of course, it will have an impact on iron ore demand and iron ore prices and overall sentiment in China, and therefore will create a sort of clash between the push for higher prices because of lower supplies from the CIS, and on the other hand, the effect of impacts on Chinese demand by COVID. If we stay on raw materials, I think it's interesting what I mentioned before. I mean, how this storm is impacting differently producers using the integrated route or the electric arc furnace. Look at the differential between iron ore and scrap. Differential spiked, of course, as it was expected, and reached almost $500 last week, at the end of last week. So, of course, the differential puts, for example, Turkish producers, but also European producers, specifically in the south of Europe, or longs producer in Europe, but also North American producer, in a more difficult situation compared to more integrated producers across the globe. So if we look, for example, at Europe, what is interesting is that if you add to all of this the increasing energy prices, which are already increasing since the end of last year, but had a further spike after the Ukraine war, you see, for example, what I've put here is just some names of the steelmakers that have announced last year temporary slowdowns or stop of their production, linked mainly to energy costs, but also to the fact that the market becomes unpredictable and difficult to plan. Because if you look here, I mean, I've put Celsa, Megasa, ArcelorMittal Spain to highlight, and Pittini to highlight the importance of course, the Southern European, how strongly the Southern European market is impacted because of its reliance on energy, for example, using Russian gas, but also on electric arc furnace and scrap. But don't forget also that this impact has been heard also in Germany. And also, it's interestingly enough, in the stainless steel market, which was also impacted by the spike in nickel prices. So all these elements confirm that there is a sort of almost impossibility to predict what is going to happen next week. And this is, of course, forcing steelmakers to take a quick decision. This is, of course, this slide is related mainly to longs and stainless, but don't forget that on the flat side, which is in Europe, which is reliant mainly on iron ore, anyway, there are problems of supply of raw materials, and there are anyway problems of understanding where the price is, as far as flat products are stopping continuously their offers to assess the market before moving. So last topic is, of course, safeguard. I mean, this webinar was supposed to be focused on Europe. Then, of course, we decided to make it broader because of the war and the impacts of it on all of the markets. A very European topic, anyway, affecting the global market is safeguard. The safeguard measure remain in place. Here I've just put HRC, rebars, and hollow section, but as you know, there are 29 subgroups of products affected by the safeguard. And you can see here not only how important Russia, Ukraine, and Belarus in this case, to include the CIS, another country that's been impacted, are to European imports, but also how much these quotas are used. This graph is from the 9th of March, from last week. So you can see that Russia, Ukraine, Belarus quotas were, at least until the last quarter, used very rapidly when they became available. So this, of course, also confirms that even in the short term, the impact will be strong because the supply needs to be redirected quickly. Now, it's a news from yesterday that the European Union confirmed that they will ban all the Russian imports, which is included under EU safeguard measures. What this means is that all of the Europeans finished steel, all of the Russian finished steel products that are within the 29 subgroups of the European safeguard measure will not be allowed anymore in Europe. The quotas assigned to Russia, which are important, will be redistributed in other third countries, but this doesn't take in, we believe, even though it's not specified yet, that also the quotas for Belarus will be redistributed. Belarus, steel from Belarus was stopped, was officially banned in a way the week before, and it only new contracts are banned at the moment for new purchases. But what it doesn't take in consideration anyway is that on top of the Russian quotas and Belarusian quotas, there are also, for example, Ukrainian quotas that are very important in the safeguard measures. Ukrainian mills are, for force majeure in a way, having difficulties to supply and produce, of course. So the whole topic of safeguard needs to be reconsidered. There is an ongoing review already started at the end of last year, but what is interesting is that, of course, today this review is completely, has to take in consideration a word that is completely different. I've put here a quote by the executive director of VDMA, which is a heavy machinery association in Germany. They call for the European Commission to suspend all EU steel tariffs, steel quotas, and dumping duties on steel. I don't think this is going to happen because it would be a bold move at the moment, but what it's clear is that there is growing concern regarding, in particular, safeguard measures, which could be stopped, temporarily halted, or changed rapidly in order to make sure that more volumes become available. And just to finish, of course, safeguard will be a topic that we will discuss, but just yesterday during another webinar I participated, a European steelmaker, Mr. Pasini from Feralpi, even though producing longs, he mentioned that he understands why there is this request for safeguard to be stopped or temporarily halted or changed in a way, so that there might be also an opening from the steelmaker side to understand how it is important to protect the entire supply chain anyway in this moment of uncertainty. So this is all for me. If you, well, I'm available for question now and on my email. And then, of course, this is a webinar, but I very much look forward to meet you in person. Here you have some of the events planned. I will be personally at the Milan, at our European Steel Markets conference in Milan, which is both in present and online. So hopefully I'll see some of you there. Thank you very much.
Thank you very much, Emanuela, for that excellent presentation. It sets the scene very, very nicely for the rest of our discussion that we're going to have here today. I would like to invite the rest of my colleagues back on so that we can continue the discussion. So, where to begin? There's so much happening, there are so many variables, there's so much to take in. A good starting point on the discussion, considering the focus is on Europe and the main issue is the war in Ukraine and how it's affecting steel trade, would be to look at the CIS market. Of course, Ukraine and Russia are both crucial, massive suppliers to the merchant market of steel, of raw materials, ferrous products in general, and Europe is very reliant on them. But we've had a drastic reduction in Ukrainian ferrous production and severe disruption to supply of products from the CIS, from the Black Sea especially, because of the war in Ukraine and the subsequent sanctions on various Russian entities. So I would like to turn first to my colleague Katya, who is looking at the CIS markets every day, to ask you how are you, what's the situation in the last 2 weeks? How are you seeing it? How has CIS trade been disrupted, and are there any signs of a alternative trade routes being agreed, or CIS suppliers finding alternative destination markets?
Thank you, Adam. Good morning, everyone. It's clear to see that the disruption in international trade is huge. We're here today to discuss the very fact that European market especially, and the markets that are around European market are all experiencing major shortages of products. Trade patterns are being disrupted, they're being amended. Buyers are looking for new supplies, new routes. Technically, it is extremely difficult for Russian producers at the moment to export anywhere, but it is not completely impossible. So because the sanctions that the European Union and the United States have implemented, some companies, few companies remain not sanctioned, some Russian banks still not sanctioned, and some destinations are still available for Russian steel producers, mainly looking eastwards. I think probably, possibly, again, technically going as far as Latin America as well. But the problem is that the situation is unprecedented and obviously very politically and emotionally charged. So even if buyers are able technically to obtain Russian material, there are several issues which we have not encountered yet in, historically in steel trade or any trade that they have to contend with. And the most important ones are risks, of course, and the risks are huge because, as Adam mentioned already, and as we can all see, the situation is changing every day. The pace of change is unprecedentedly quick. So if one producer is not sanctioned today, then there is no guarantee that this producer will not fall under sanctions tomorrow, which means the company that is under sanctions cannot trade, which means if you made any prepayment or if you made any agreement, even if you paid in cash, avoiding the sanctioned banking ways, which has been done in history with other countries, still there is no guarantee that you will receive this material. So even though some buyers are very, very keen to continue buying, the risks are too high and they don't do that.
Thanks, Katya. Yes, it's a very fluid situation, and it's important to keep our very, very close track of it because things are changing all the time. I think this is one question which we've had from the audience, which we can certainly pose to all of our panelists. The war in Ukraine at the moment, what impact has it had in the last 2 weeks on steel prices? I mean, you know, we all have we're all looking at our own respective regions, and it's a war in Europe, but it's affecting the global market. Considering the focus is on Europe, we'll maybe turn to Emma first, and if you could just, I mean, you mentioned in your presentation already a bit of price development, but how have steel prices in Europe developed over the last 2 weeks since the war broke out?
No, yes, I said already in my presentation, I think it's clear the impact on prices. I would like to say unprecedented, but what is interesting, in my opinion, is that we arrive at this situation in Ukraine after we already saw an unprecedented rise of prices since mid-2020, let's say last quarter of 2020. So it's interesting because, you know, we're commenting this situation, which is true. It's fueling an unprecedented reorganization of trade, therefore impact on prices and so forth. But we arrived to this after actually less than 2 years ago. We lived almost the same situation with prices rising in Europe in particular, but let's not forget what prices did in North America, for example. Every week they were jumping by 100 euros or $100 in that sense. So we are in a very fluid situation. What I would say is that the market, in my opinion, already knows that this volatility is part of it. I mean, so it's maybe a little bit quick. I mean, it's readier to react to price volatility. The main issue is what Katya said, is reorganizing trade patterns, because as we mentioned, Europe cannot import finished steel prices from Russia, included in the safeguard measures. In theory, it could continue to import slabs and billets. The problem is, this is only in theory, because of course you need to avoid doing business with sanctioned companies, avoid doing business through sanctioned banks, and then you have also to be willing to take the risk that anything happens, risk of non-delivery or whatever. So of course the reorganization is very huge. So yeah, I mean, in terms of prices, yes, it's unprecedented. The jump is there. I think everyone can comment on this. But it's interesting that a year and a half ago we saw for 9 months the prices rising and rising and rising and rising every day at the same sort of pace. So my question actually is the opposite. How long will the effect of the Ukrainian war be on the market, and how quickly actually the market will wake up and say, well, actually the whole sentiment is not destroyed, but I mean, demand will be impacted as well, and therefore prices will start moving down because the economy overall globally will be negatively impacted.
Yeah, thank you, Emma. That's an absolutely interesting and valid point. Speaking of finished steel supply disruption into Europe, one country which has been touted in the last couple of weeks that stands potentially to benefit from the situation and has been looking at, of course, filling the supply void left by the CIS in Europe is India. And I know the situation is spurring significant price increases in India, especially when you look at hot rolled coil exports. So, Amir, how is the situation looking in the Indian market? Are the mills seeing this as a very lucrative opportunity to supply to Europe?
Good morning, everyone. So yes, thank you, Adam. I think, like, the situation has created opportunity for some nations and disruption for others. So if I talk about India, we are definitely seeing a surge in the prices. Like, everything is going up. So because of which we can say that this disruption has come as an opportunity to India for the export market, because, like, I think India and other Asian countries are in the position to fill in the supply gaps. But seeing there are no anti-dumping duties on India, so definitely India is in a win-win situation in both terms, in the terms of supplies as well as in the terms of prices. So yes, India is on the better position now when it comes to exporting it to Europe.
Thank you, Amir. We've had one interesting question from the audience just come in. What is your view on if the war stops tomorrow? Will prices collapse? It's quite an open-ended question, but I think the wheels that have been put in motion since the war began are going to be probably longer lasting and last longer and further after the war is finished. The trade disruption we've seen, as I mentioned at the beginning, the economic and political relationships that we've had hitherto are going to be totally disrupted and changed by this. I don't think we're going to see a collapse in prices immediately. I don't know if anyone else has an opinion on that. The effects of the war will be longer lasting than just the war itself, in my view. But that's a what if question. We can only hope that there is a fast conclusion to the war and that trade resumes. But of course, if you look at supply disruption, if you look at Ukraine, for example, all those companies which have idle production, which have shut down production, the damage which has been done to some industrial facilities in Ukraine, that's not going to be fixed overnight. That's going to take time to rebuild, investment to restart those blast furnaces that have been idled. So this is not something which is going to change overnight. There will be significant disruption even after peace is secured, in my view. But turning back to scrap, to prices, sorry, and looking at scrap now, because we had a little bit of a problem with the poll earlier. The results didn't show properly. I can reveal them now. The majority of people, 53%, believe that scrap prices will not return to anywhere close to $500 before the end of this year, whereas 44%, here we go. Here's the poll answer. Thank you very much. So the majority, as you can see, there 53% believe that prices will remain high for the rest of the year, presumably because we will see a continuation of supply disruption for the rest of the year. And that's a new reality that we will have to contend with. So I would like to bring in now my colleague Burçak to give us her view on the scrap market and what have we seen in the scrap market in the last couple of weeks, and do you think these high prices are here to stay for the time being, Burçak?
Hello everybody, good afternoon from Istanbul. First of all, I agree with the majority of the voters. I don't think scrap prices will calm down in the near future. Looking at the situation in recent weeks, we have seen an increase in prices at more than $135. Reason for this was, Turkey was halting scrap purchases due to weak steel sales just before the war. Although this was putting pressure on scrap prices, suppliers were aware of Turkey's needs because Turkey did not buy April shipment scrap cargoes and needs to buy. So they were holding their prices firm. With the start of the war, Turkey has received huge billet and HRC demand from CIS major export destinations and has been forced to accelerate scrap purchases as their purchases were largely missing for April shipment, and this has caused prices to jump by more than $135 in 3 weeks' time.
So yeah, there's been significant impact on scrap prices. One of the
Sorry,
drivers
Adam,
is, yes, Emma, jump in, please. Yep.
Yes, sorry, I just wanted to add and also ask Burçak what is if I can, what is because we're on scrap. I also agree at that, and also one other element that we need to take in consideration is we spoke for already 2 years, I think, in Europe. I mean, the European steelmakers are trying to lobby or find a way to limit the exports of scrap from Europe going into Turkey. We know Europe is the largest exporter, and they are increasing this attitude now as scrap prices increase again, because they want to make sure they can control a little bit the prices. So the question is, if you take in consideration the fact that going into Turkey, the biggest suppliers were coming from the CIS, which my question is actually what happened to that supply? Is it disrupted as well? The other big supplier is Europe. So what happens if we have an ongoing disruption in scrap supply from the CIS? Europe finds a way to limit scrap exports in some way through, through some sort of normalization, or so the reality is, if we look beyond the war, the future doesn't really look good for big free trade of scrap in the market, and therefore lower prices. I don't know if Burçak, what do you think?
That was an issue even before the war. You know, we have talked about this a lot last year, actually, because we have seen many restrictions about scrap exports in many destinations. And Europe is, it can happen all of a sudden, because I know yesterday some European producers have called for it again. In the shortage of scrap, they want scrap to stay inside, of course. This changes everything, because Europe is the largest supplier of scrap to Turkey, and if it is disrupted, this changes everything. And because Turkey has no capacity to source this scrap from the domestic market, we can only provide 30% of our consumption from the domestic market. There are new coming markets, of course, but no one can fill the gap coming from the European Union. So everything is changing very rapidly, and it's really very difficult to make a forecast, but it changes the whole game. And regarding the scrap supplies from the CIS, they were already too low after the increase in export duties, both in Ukraine and in Russia. In January, Turkey has imported about 200,000 tons only from the CIS countries. It's too low. So it was already disrupted even before the war. But we're hearing many billet offers nowadays in the Turkish market, and it is kind of putting pressure on scrap prices. I'll talk about the outlook for scrap prices. I'll talk about them.
Yep, thank you very much, Burçak. So speaking about this, speaking about the supply of raw materials, or steel and raw materials from the CIS into the EU, obviously they're very important. Blast furnace based producers in Europe rely on iron ore and coking coal from Ukraine and Russia, and that supply has now been more or less stopped. And I know a lot of European mills are anxious, and they're desperately scrambling for alternative sources right now. They're looking, of course, at Australia, Brazil for iron ore, but shipments from those origins take a lot longer to arrive than from the CIS, which is on our doorstep. So there is a bit of anxiety among the mills, and of course now with the EU banning the imports of Russian finished steel, there is the question of, would the EU now lift its safeguard measures in order to alleviate the pressure on the market and the pressure on buyers, steel buyers and end users in Europe, so that they can source material more freely. What do you think? I know it's early days and it's difficult to say that at the moment, but what is the likelihood of this happening in Europe? Safeguard measures being lifted completely. I know there are some end-use associations which are calling for it. I think you mentioned it in your presentation, Emma. Do you think this is it likely to happen or not? What's your general view, Emanuele?
Well, as I mentioned in my presentation, yes, I don't think it's likely to happen, a stop of safeguard measure per se, but I think the European Commission will accelerate the review, and we should know in the next few days, in my opinion, some adjustments to it. The main point is that even when demand after COVID jumped in Europe and prices jumped, and there was already a push by the market saying there was a lack of supply, there was difficulties in finding supplies. Even then, the European Commission, rightly so in their view, said that anyway, the measures were in place to continue protecting, in a way, the market from the redirection of trade existing from Section 232 in the US. So because that has not changed. I mean, it has changed in the fact that Europe can trade now still with more freely with the US, but it has changed. It hasn't been cancelled completely. The safeguard measure legally continue to have their value on the eyes of European Commission. So the only thing I can see is a rapid sort of relaxation or change in the way the quotas are assigned in order to make sure that that there are more quotas. And as Amir said, of course, if we already take out Russian and Belarus quotas and we redistribute, there are countries like Turkey, like India, that will probably, hopefully, from the 1st of April already have more quotas available. This is not going to change massively, but it's already. I mean, last week we were talking with Mr. Marcegaglia from Mr. Antonio Marcegaglia from Marcegaglia. They're one of the biggest buyers of slabs, for example, but also hot rolled coil in Europe. And he said clearly, we don't feel the pressure on hot rolled coil per se, because we can find it in the market. We can find the real issue for us is semi-products. So safeguard measure actually will be tweaked a little bit, in my opinion, but the big issue is making sure that raw materials, meaning including in the raw materials also semis, can come in Europe, because for those there is almost no alternative, or it's very difficult to find an alternative.
Thank you, Emma. Yeah, on that note, along those lines, Turkey is obviously another potential supplier of steel in general, of coil, for example, to Europe, which is experiencing shortages, which was experiencing shortages to an extent even before the war in the EU. Katja, I mean, what are you hearing about Turkish, the Turkish hot rolled coil market and its potential as a replacement for supply in the EU?
Well, obviously, Turkey is a long-time supplier to the European Union of all the products. Technically, they've been developing alongside each other for several decades, and until the post-COVID demand release, when Turkey had domestic demand, which it couldn't almost satisfy itself. As we know, Turkey is also a net importer of flat products, so it's a huge importer. So at the moment, Turkish import market has changed already during the COVID lockdowns. There was a lot of fresh Asian supplies that entered the market, and at the same time now that Turkey is, well, it again technically hasn't lost CIS supply, it has lost completely Ukrainian supply. Obviously, Ukraine was second largest supplier of HRC, for example, to Turkey. Russia was largest supplier. In some months it would have supplied up to 200,000 tons, even more, of hot rolled coil. So and let's not forget also slab, if we're talking about production of flat products. So right now, Turkish market has peaked. The HRC prices are 1,250 in offers. Mills are already in June rolling books. They're offering in the export market almost at the same price because their domestic market is quite strong. And that's also due to re-rollers and processors who also export. So the ties between Turkish and European market already close ties, and they have potential to develop even further But Turkish domestic market itself is very strong. It has strong demand. It has calmed down at the moment a little bit, but at the very high point. And if we don't see scrap falling down, if we don't see an alternative slab supply being found almost immediately, we're not going to see prices going down for some time. And we're not going to see demand going down for some time, because Europe will be wanting HDG, Europe will be wanting cold rolled coil. You know, those markets are still going to be fed. And the United States, which also was added to the list, re-added to the list of Turkish export markets in the past year.
Thank you, Katya.
Sorry, Adam. I want
Yeah, sure.
to add a note here with the redistribution of Russian quotas. It has been on Turkey's favor here, and I want to say that Turkey's HRC quotas has been increased by another 107,000 tons, and rebar's quotas has been increased by another 26,000 tons. So this is good news for Turkey. And other products as well. I'll have a look at the wire rod, 30,000 tons, another 30,000 tons for the April quota turn. So Turkey will have the chance to increase its exports to the EU.
Can I also add something on semi-finished products exports from Russia, or possibility of such? As we can see, even though the sanctions in the European Union are extremely tight and very tough, and they are openly have been implemented in order to hurt Russian economy, and that is, you know, that is the aim. But at the same time, imports of certain products have been allowed and are almost encouraged. And I'm not talking about steel at the moment. There are other vital things that, you know, for example, Russian nuclear industry supplies to Europe, which is very important, that these have not been touched. Now, because, and when I say unprecedented, I don't mean price rises, which we already discussed, but the whole situation is unprecedented, because at the moment, you know, this war is not only being fought on land with arms, this war is also being fought by other means, such as trade measures. And I think that because everyone, you know, there is no scheme, and that's what a lot of people are saying, you know, there's no rules, that, you know, we've never been in this situation. At some point, when the emotional, psychological pressure is going to cool down a little bit, and the results of all these sanctions are going to be even more apparent for producers in Europe, in particular, I think at that point there will probably be certain pressure from the producers to allow Russia to supply not value-added products, which is what every producer wants to supply, but something such as semi-finished and iron ore, and it will probably be allowed at certain, you know, formula, but you know, that is lower value exports. They're not going to make a lot of money for Russian producers, but that, you know, as a necessary step, I would not exclude such flow of action in, you know, in several weeks or months' time, if the situation does not resolve. But as we said, even if the war stops tomorrow, you know, the whole structure of trade has changed so significantly that I don't think it will come back to the same pattern that it has been at all.
That's a very interesting point, Katya. Thank you. Once the dust settles down the line, we may have to be a bit more pragmatic in a way, I guess, and reassess the situation. Certainly, it's difficult to do that amid the emotion and raw brutality of war, of course. I'd like to turn to Christian to bring you in. I know that obviously, you know, Germany being the EU's largest steel market, end-use sectors, namely the construction sector, were experiencing some issues even before the war with rising costs. Rebar vendors supplying construction companies, as well as construction companies, were complaining about costs and not too happy. You know, what is the health of of the industry and those steel suppliers who serve the construction industry amid all of these surging costs that we're experiencing now in Germany?
Yes, thank you, Adam. The steel suppliers are certainly alarmed, but so is the construction industry, namely the customers. And last week there were sort of calls from both big associations from the construction industry saying we are facing costs now we haven't faced before, and somebody needs to do something about it. It was basically a call to politics, to the policymakers. It was not very clear what they are aiming at, but if we look at the steel element of construction, and that's not the only element. Actually, bitumen and oil-based products are much worse these days in terms of price increases and in terms of shortages. But when we look at rebar, before the war, at the end of last year, we had a bit of a settlement from the peak we saw in autumn, when the base prices of rebar in Northern Europe, in Germany, came down to below 600. I mean, further before that, they were far above 600, which was an all-time peak already. They came down, they were below 600, and came January, they were sort of inching up again, coming close to 600, not quite reaching it. And then the war started, and all of a sudden there was a leap that came like within a week's time, that the prices given by the mills was 800. Like 200 within 1 week. And that was still not the end of it, because the question was still, okay, 800, but there were not very many transactions. What I heard was that applied only to smaller volumes, which people needed instantaneously. But apart from that, mills were reserved with accepting very many orders at all. At the moment, I'm not quite sure what the latest stage of things is, but most people I talked to agree that prices are certainly going up, going towards base prices of 850 and more. So that's what's hurting the distributors, the actual buyers of steel, who have to pay those prices, and it will have more repercussions further down the value chain with the construction companies, who have to face those higher prices plus the higher prices of bitumen and other oil-based products, where I hear the prices have leapt up even more, although I don't know to which extent. But what I understand is that construction companies are hurting even more from higher prices of all kinds of materials than the steel buyers, than the benders. And this is the first time that, like I say, that the construction industry itself issues a call for help, for political help. And because before that, it was mostly the benders that were sort of squeezed by the construction companies because they were the bigger ones. They could pressure prices. But now even the construction companies cannot deal with the prices anymore. And they say, we do not get offers from the suppliers, from the steel companies, from the distributors or the mills. We do not get sufficient orders we can calculate with over the next months.
Yeah, absolutely. Thank you, Christian. So the construction industry is severely under pressure. I'd like to turn to Amir again to bring you in and just get your view on how the situation in the supply disruption being caused by the war in Ukraine, how is it impacting raw material supply to India to supply Indian steel production? At the same time, is there any significant impact on scrap supply from the EU to India currently?
Yes, we are definitely seeing disruption in the raw material supply. Recently, the most recent example is the agreement which India and Russia signed for the supply of coking coal. And seeing the volatility of coking coal from Australia, India thought that the supply of coking coal from Russia could actually ease the supply, and in turn it would turn into it will be beneficial for the steel industry. But as we are seeing the sanctions on Russia now, I mean no banks are accepting the payments that are made to Russia. So this is something a loss for India in terms of coking coal supply. Talking about scrap, scrap is like from Europe, we are seeing disruption. Offers are going up now. I mean, offers are seriously dramatically going up in India, Pakistan, Bangladesh. So I think, like, we have already seen a surge of $80 to $100 in a span of 7 to 8 days. As I previously said, that, like, everything is going up in India, be it scrap, be it coking coal, iron ore prices. So, like, in terms of raw material feedstocks, India is facing problem, and which is again, like, it's going to impact the finished product prices as well. So this could be one of the reason why India is not exporting steel in bulk quantity. We are only seeing small tonnage which has been exported from India. So this could be the possible reason.
Right. So even though there is this opportunity for India to supply Europe now, given the situation, there are constraints on steel production in India that prevent it to an extent from doing
Exactly.
that. And of course, what is the Indian domestic demand situation looking like? Because the Indian mills, their first duty is to the domestic market, and if the demand there is strong, then they will supply demand there rather than exporting. So how does it look at in the domestic market?
I think, like, the domestic demand, when it actually started, so we saw a dramatically surge in the domestic market as well. Like, everything was up. Billet was up. Uh, the local scrap was up. Iron ore was up. So it was actually, like, supporting this Ukraine and Russian thing. Talking about the current situation, I think, like, the domestic demand has become stable now. We have seen marginal drop in the prices, and, like, it is all because the demand has come to a stable position now. The domestic demand is something, like, it is not that much affected by this Ukraine and Russia crisis. It is the export which we are seeing.
I see. Thank you very much, Amir. Sticking with Asia, but turning to Katya. Sorry, I just want to say I'm conscious that we're running over time to the audience. However, we have so many questions flooding in. We're just going to try and answer a few more before we finish, because there's obviously a lot of interest here in these topics, and we're very happy to have you all participating. But we have so many questions flooding in. The ones that we don't manage to answer today, we'll aim to answer after the webinar and send out to you by email. But just a few last questions before we finish. Katya, we have some interesting ones here. Number one, is Asia the new market for Russian pig iron, in your view? And number two, how likely are we to see, given the situation, given the sanctions that Russian entities are under, how likely are we to see Russian material being dumped or sold at very low prices to Asia, and then potentially re-exported? I mean, that's also a potential thing. Yep.
Is Asia a new market for pig iron? At the moment, every company in Russia is looking at redirecting their production, starting from upstream to downstream, anywhere, and literally working 24/7 trying to find how and where to sell it. So it's quite possible that pig iron, which is not sanctioned in Europe, which is probably one of most in-demand products at the moment, pretty much everywhere, will be the first product that will be finding its ways to new destinations, already established destinations. It's logical that people are looking at China and other Asian destinations, not just for pig iron, but for other products. But let us not forget that technically, again, Russian companies can still export even to Europe if they find the acceptable terms, both buyers and sellers. So going to the second question, will it be sold at a discount? The Far Eastern sales compared to Black Sea sales, when we look at FOB price, always carried a certain discount. That is to do with the railway leg that they have to take. So it takes longer for some mills to transport material to Far East or to Black Sea. So there's always been a certain discount in Far East. Whether it's going to be even larger discount now, again, we do not know. Whether the routes will change, if pig iron, for example, travels to China, you know, whether the railway is going to be used, or whether freight, you know, sea freight is going to be used, we don't know. At the moment, again, is there a possibility that Russian material will be resold? We know it has been done in the past with other countries. You know, we cannot say. I think that the awareness in the market is so high about the danger which buying Russian material carries with it, you know, such as economic and danger of non-delivery and everything else. I think there is a lot of you know, wariness about buying Russian material. At the same time, if technically and legally mills can buy that, and if they can find acceptable terms, such as, you know, delivered duty paid, for example, if mills already have very good long-term relationship and they trust each other, then maybe they can find the ways. But at the moment, it is literally a chaos within which some stems of possibility are being searched for. So anything is possible, but the reluctance is huge.
Thank you, Katja. Yeah, chaos and turmoil are two words that I've been seen used very often in the last couple of weeks, and there's no better way to describe the situation really at the moment. Burçak, I'd like to bring you in because I know you've done a bit of work on this in the past. Considering the situation now, considering Europe is going to need steel from other sources, Turkish steel industry has been producing below its capacity for many years and is investing into new capacity. Do you think it's an opportunity for Turkish steelmakers to increase their capacity utilization now in order to fill or to address the supply shortage that we could see?
Certainly, we have already seen those capacity utilization, the increase in capacity utilization rates. And besides, new investments are commissioning in Turkey. So we will most probably see higher capacity utilization and more scrap demand in the coming months. You know, last year Turkey's steel production has increased 40 million tons, and I think its scrap consumption will reach those values this year. So we will most probably see an increase in crude steel production as well as scrap consumption.
Brilliant. Thank you very much, Burçak. We are over time already, as mentioned before, so I'm going to bring it to a close, even though there are more questions. We will aim to address them after the webinar and send them out by email. I would like to thank you all for joining us for this discussion. I hope it's enlightened you, informed you in some way about what's happening in the market. Please do feel free to reach out to us after the webinar if you have any more queries or questions. And feel free to check out our upcoming events on our website, 3 of which were mentioned earlier by Emanuele. You are very much welcome to attend them all. I would like to thank my distinguished guests, panelists, colleagues, Emanuele Norsa, Katja Orakova, Christian Köhl, Burçak Altman, and Amir Sayed. Thank you very much for your contributions. It's been a very insightful discussion. And we will see you at the next edition of Steel Markets Insights by Kallanish. For now, everyone, take care. All the best. Bye-bye.